Hey traders, good morning. It's about 11 o'clock in Chicago. We are on the 22nd of June, and welcome to the chart review of the day for the Pro Room. Okay, let's jump and take a look at the markets. So let's see. I mean, Jay Powell had a little bit of testimony in front of Congress. They grilled his ass regarding inflation and what can be done to save the world, and why he's not doing more, and why he's not giving suggestions to the Congress about what he should do. This, that, and the other. Obviously, the Fed is not supposed to be political. He can't really go down that road. He's trying to stay neutral and just say, listen, dudes, my job, it is to stabilize prices, maximum employment, and control the monetary side of the economy, not the fiscal. That's not my job. That's your job. And I'm here to raise interest rates if we're getting a heated economy, and I'm here to cut the rates if I'm getting a bullshit economy and things are going down the drain, right? So that's pretty much the gist of it. And markets rallied a little bit here. I mean, you see we broke higher in the NASDAQ a little bit on here. Trading with the bullish tone. We're pulling back a little bit, so not much there. I mean, the whole narrative out there, guys, it's, are we going into a recession? If we are, is it going to be a short-lived one, just a quick technical recession, or if it's going to be a consumer recession, much drawn out, bigger, longer, stronger, everybody gets hit. So that's where we are, and that's why you see this jump in bonds, a little bit of sell-off in yields, a little bit of a safety play, maybe more of a run. I don't even know, is gold up? Gold is up, but just kind of barely went up a little bit. So listen, the market is still trying to find out, what the narrative is, what should drive the next move in the market, right? Is inflation going to come down? Is it going to go up? It's going to be a recession, slowing economic growth, stuff of this nature. A lot of forces at hand. We're looking at the dollar that's near, I don't know, few years, 8-10 years high, or whatever the dollar is at right now. And you're looking at the crypto that's melting away. You're looking at the stock market that's trying to form a base. So there is a bunch of stuff that's kind of happening. I'm just nibbling as much as I can. I don't have a pure, strong directional view. And let's say, I'm positioned for the moon. I'm positioned for new all-time highs in the S&P 500. Who the hell knows? I mean, it's just a matter of getting out of the slum and turning, making a little bit of a turn. Show me that you can climb at least above the 50-day moving average on the equities, right? I'm not even talking on Bitcoin, because Bitcoin it's still far. It's 32,000 is the 50-day moving average right now, and it's it looks like it wants to do another leg lower here. So look at the prices. This could be just an ABC, a failure right here. ABC up, and we could be crashing down. A 5-wave move to new lows. It can be two things. It can be the beginning of something, or it could be the end of something, depending on the higher degree trade. That higher degree trade might not be done. That's why it could be the beginning of something, because if it's still a 5th wave to the downside, or a 3rd wave, this could be a wave 1, a 2, and then you're crashing lower. If it's the end of something, then you're looking for an impulse higher, which is supposed to come up in 5 waves and go into 1, 2, 3, 4, and 5. So far we have a little bit of a pathetic impulse out of here, a little bit of a pullback. This could be a B and a C, and you can have a flat and rally higher. As long as 11K still holds steady, this could be looked at as, the beginning of something, and maybe, we're correcting from here, because this was, or we're motive wave from here, because this was, a big down sentiment up here into these lows. So that's one aspect of it. And the markets are forward looking, right? And they could say, hey, fine, listen, what we're going to do right now is, everybody kind of priced in a bearish scenario. Things are moving down. Everybody's throwing their stocks out the window. But the Fed, maybe not in the fall, maybe early next year, they're going to start cutting rates. And the markets are going to get ahead of that. If they sniff that out along with the bond market, that there's probably going to be easing coming from the Fed, more monetary stimulus. You're moving from quantitative tightening to quantitative easing. These markets are going to front run that. The rest is short. So we don't know that yet. But let's see what the narrative develops. The S&P 500, it's not doing much in here, following pretty much everything. So I'm not going to spend, going. I mean, the Russell is the weakest here, down 0.5%. Then bonds, rallied up in here. It did like a nice impulse in either a 1 or an A, down in B, and in either a C or a 3, the beginning of a 3. Now I took profits in bonds. I had some bonds long from somewhere back in here at the position. I waited to this decline. I'm like, I think we're going to get a bit of a push higher. We're still in a downtrend. So the risk is I want to see this market climb higher a little bit, but I'm willing to trade, with the bullish tilt until we're breaking above these levels. But what if this is just an ABC and we're crashing lower? And I'm going to watch this 133.14. If we're going to come back below it, then we know we're taking another low, and I might just short bonds. But I took profits on that trade. I'm out of it right now. I still have a 10-year yield position, a 10-year bond position on my Thinkorswim platform. That I'm going to hold on, just give it a little bit more time, see if we're reacting higher. But that's on a separate account. So that's what I did this morning. I still have my corn position here short ZC, which is, let me see here, ZC, I think N22 was it, or which one was it? No, 760. Let me go here and see which one it is. ZCZ22. So I'm up about $800 on this one. I'm looking for this one to crash lower. So ZCZ22. Let me pull it up here. So that's the forward contract. That's the contract for December. I'd say with the 3-way failure in there, big impulse lower, I'm continuing for this one. I mean, I might get a bit of a pullback, but I'm waiting for this one to start to crash below 680, 660, maybe 640, and see if I can, maybe double this amount here, or maybe, for a nice trade, maybe even triple it. But we'll see what happens. I'm still long the Russell 2K. So this one, it's still, because I got a pretty good entry on it. I'm going to hold on, but if things are sniffing out like we're turning bad, I might just bail out of it. That's the Bitcoin position, a little bit negative on there. And then this is the VIX 230. So VIX is coming down on here, down 106. So we went up, came back down. It is declining, so we're making lower highs in here. We're not making lower lows. So this market, it's not, it's kind of digesting now. It's just marinating in here. I'm just doing nothing. But I am staying tilted with the risk on positioning, and I want to see VIX kind of come back lower. Again, maybe 28 to 27. We'll see if that happens. That should help Bitcoin. But for right now, if we're looking at Bitcoin in here, 20,045. On the futures, it doesn't look very bullish. It looks like just a 3-wave move up in there, and maybe they're ready to crash lower. However, you don't see here, but there's a big divergence now in price. Well, that might have been due to a little bit of time off in the futures and all that, so I'm not going to put a lot of thought into it. But something to watch here as we're still holding the 20K level on Bitcoin. Copper is another one that I have my eyes on. I would like to long copper in here, actually, because I think we're towards the final stages in this 5th wave. And maybe I can get an impulse followed by a pullback and try to see if I can squeeze a trade higher out of copper. On a daily charts, we've broken below some important levels. You can see right there. That's no small change. I mean, this could be an A, B, and then down in a bigger crash in C. Remember, recession and copper as a proxy for risk and all of that. But that doesn't mean that this move will crash lower. For it to crash lower, it would have to be an extended 5th wave or a 1, 2, 1, 2, 3, 4, and 5, 4, and 5. So I'm going to wait a little bit on it and see how it kind of shapes up from here. But I'm thinking I might want to nibble it from the long side. Maybe wait for an A and buy a B wave pullback first, because this is a still pretty strong downtrend. I don't want to kind of get my head ripped right here in copper. This is another big contract, and it's not like I got to check if they have more of a smaller one. So I think they do. Okay, what else I wanted to say? Okay, natural gas flat in here, 1, 2, 3, 4. Looks like we're doing a 5th wave, so possible pullback. Oil market. Oil, I wish I would have stayed short a little bit longer. Here we are with the big squeeze higher. I think that's a pretty good decline in 5 waves in here. And 1, 2, a little bit longer. 1, 2, 3, 4, and 5. And now an ABC higher. That would be kind of the idea. But let's see. I'm going to wait for it to form. I'm going to wait for this ABC to form before I step onto this short. And I don't think I really want to long it. So that's my take on that. And then euro, here we are pushing higher. That's not bad. Not bad. If we can get ourselves above the 50, we can start to trend. And that's what I'm looking for. Give me a couple of daily closes above 50-day moving average in here. Let's see how it looks on the daily. It's just a little bit, just one. Maybe they're going to do another one. It's still trending lower, as you can see, but it's probably losing momentum. So again, I wanted to try my luck at long euro again. But if this was an A, B, and then we're doing another C before we rally, that's the risk. So against 103.61, long euro might not be a bad idea, and I'm going to let you know as soon as I move on to that. Everything else, it's just pretty much the same. So one more look at the positions in here. SoFi, it's probably going to melt away. I mean, I spent $600 for this trade, and if I sell it now, I'm going to get back about $450 back. I'm down 150. I'm going to leave it a little bit more. It's far. It's up into October, But if I'm starting to see that I'm $300, $350, I'll probably just bail out of it. In the meantime, I'll just continue to watch corn, how it's doing. I'm watching VIX and Bitcoin. Still, the trade from 18K looks pretty decent. But, I'll do the video on Bitcoin here next and tell you my thoughts on there. All right? Talk to you soon. Bye.